Okay, it is Wednesday, October 28th, 2015. And I apologize for making this video later in the day. Now, with FOMC, which you can see here, we're looking at the dollar. We're looking at the dollar yen right now. FOMC, this is the reaction in that candle. And so far on this position, on this particular currency pair, we've taken two positions. We've gone long, both long and short, and we've made money in both directions. Now, going long was after FOMC, and we then sold it after the rollover period. So we've already taken profits and we've earned over 45 pips trading both long and short on this one. Now, I did experience a couple of losing positions with FOMC, but we've earned those losses back already. And I have another open position on the euro dollar that has not reached its target yet, but we're just a few pips away from that. And then we've got another position on the pound dollar, which has already, I'm sorry, just within the last couple of minutes, we've closed that position. Now, looking forward for Wednesday, we are looking for possible breakouts because we've got these overall consolidation ranges. And one of the things, and we've been talking about this with our nightly updates and analysis videos, is that when we have ranges of consolidation, very often with economic data, if it's not enough to move it outside of these consolidation ranges, then it could potentially set up an opportunity for us to trade a reversal. So very often with the HL30, and I was asked this question, are we afraid to, trade this? I mean, normally with economic data like FOMC, you get a rally or a move like this, and then it'll collapse and sort of come right back down to where it started. So aren't you afraid? Is it going to, go right through resistance or not? Is it going to pull back? And the first thing is to trade the plan. That's always what I'm going to do, is trade the plan. And if I ever experience a loss, I can always earn the loss back within the very next trade or two. That's not a problem. It's just waiting for the opportunity. And I don't jump in and out of trades just because I see price moving. That's the first thing I have to keep control. It's a matter of waiting patiently for the next opportunity. So if we have a loss, for example, I'll stay and wait for the next trading session. I'm not going to go on vacation or anything. I don't like losses any more than anybody else does. And I'm always going to earn that loss back. So here, it was just a matter of waiting for the opportunity, and it's not, price doesn't have to hit or bounce off of resistance to give us an opportunity. I mean, resistance could be something else. It could be a psychological level. It could be, maybe another selling area or a level where price ran into something that you can't see maybe on a 1 hour time frame, but it's pretty obvious on a 4 hour or daily chart. It could be many different things. And that's why I didn't hesitate to trade that HL30 off of resistance after the move on FOMC. But at the same time, what I'm getting at is very often with moves like this, we see price go right back to where it started. So I am expecting that with FOMC, very similar to when we trade non-farm payroll, we get non-farm payroll and it will create a really big move. And then the next day or so, coming back to Monday and Tuesday, price will go right back to where it started. And sometimes it'll happen even pretty much in the same day. Every day or every time we trade non-farm payrolls, it is different. But the reality is that the market sort of trades what is available at that time, and we get the reaction. There is obviously an adjustment depending on where the majority of traders are prior to that economic announcement. And then it's almost like we have that data out of the way. Now we're looking for the next set of data or information or catalyst, whatever it's going to be, that will create the next break. So here, it wasn't obviously significant enough. The market doesn't believe necessarily that the FOMC statement is solidified or has solidified a rate decision that will have some kind of impact where they're actually going to move in December. So you still have that unbalanced decision making or process, and that's what we see here in price. And that's why I think that, again, like with non-farm payrolls, all of this data is expected in the back of everybody's mind. For the most part, is the Fed going to raise rates, or are they going to keep them at those same levels? Is it going to continue like this? And then, of course, we've got to incorporate data from around the world based on which currency pair we're trading. But that's really what I'm getting at, is once you get that data out of the way, it wouldn't surprise me to see price go right back to where it started with prior to FOMC. on most of the currency pairs that we're trading. So we're flat this pair right now. And again, I do have one other open position, closed one just a few minutes ago prior to making this video. So I'll do another update video on Thursday right after the New York trading session. If you like this video and you want to get more information about these trading strategies, please click the subscribe button so that you can get instant notification when I put up a brand new video tutorial. Or you can visit my website right now by clicking the Visit My Website button, and I have some free trading manuals for you and extra video lessons with some special discount offers to use my Forex Signal service that will automatically execute all of these trades for you onto your MT4 account.